Welcome back to the Deep Dive. Today we're plunging into a company that's, well, it's more than just a tech giant, isn't it? It's basically the digital backbone for billions of us.
Absolutely.
We're talking about Alphabet Inc. and specifically taking a good hard look at its stock, GOOG. Our mission for you today, it's really to unpack what is going on with GOG right now. We're going to try and blend, the market movements, how the stock's actually behaving on the charts, with a look at its financial health underneath.
It is crucial.
Exactly. The goal is to give you a clear, concise, and hopefully genuinely insightful understanding of where Alphabet sits without drowning you in jargon. Okay, let's unpack this.
Yeah, and I think that's the key, isn't it? With a company like Alphabet, so influential, so complex, really, you can't just look at one piece.
Right.
You need how the market's reacting, sure, but also what the core business is doing. How's it making money, managing those huge cash flows? Where's it investing?
There's a lot there.
There really is. A lot of interesting data to sift through, and hopefully we can distill that down for you today.
All right, let's dive in then. Let's start with the market side, the technicals, because looking at GOG's charts, the story the market tells, it's pretty compelling. Here's where it gets really interesting.
What's fascinating here is looking at the monthly time frame, so the really long view. GOG stock has been in this remarkably strong bullish trend for quite a while now.
Like a steady climb.
Yeah, think of it like a marathon runner who's just consistently hitting their stride. There are ups and downs, little dips, but the overall direction clearly up. We've seen it making higher highs, higher lows, textbook signs of sustained strength.
Okay.
And this isn't just a recent thing. Since about November 2021, the stock's been moving within what chart watchers call a well-respected ascending channel.
Ascending channel. So like a corridor sloping upwards.
Exactly. And the price has pretty predictably, actually, bounced off both the top and bottom lines of that corridor. It respects those boundaries. It gives you a clear visual of this upward momentum, but within limits.
Okay, so consistency within a defined path, even with bumps. That's pretty notable for a company this size. Where are we right now, roughly, within that channel?
So right now, as we speak, the stock's trading around, say, $176.
$176.
Got it. And looking back a bit, we saw some real buyer strength back in April 2025. The price came down, touched that lower channel boundary again, and found strong support in what we call a demand zone, basically an area between about $143 and $160 where buyers just consistently step in.
Like a safety net.
Kinda, yeah. A buyer's stronghold. It puts a floor under the price. That bounce showed real confidence. And even before that, April 2024, the stock broke through a major resistance level from way back in February 2022. Another confirmation of strength.
Okay, so lots of bullish signals. But you mentioned bumps.
Right, it's not all smooth sailing. By February 2025, so earlier this year, GOG did get rejected pretty firmly from the 208 TICE level. That caused a bit of a pullback.
Okay.
And there's maybe a little warning sign flashing now. The monthly RSI, that's the relative strength index, it's showing what's called bearish divergence.
Bearish divergence. Okay, that sounds like something we should pay attention to. What does that actually mean for someone not staring at charts all day? Is it serious?
Good question. It's more like a yellow light than a red one, usually. A bearish divergence basically means the upward momentum isn't quite keeping pace with the rising price.
Oh, okay.
So it hints that maybe, just maybe, a short-term correction could be coming. A pause, maybe a dip, even within that bigger uptrend. It doesn't kill the long-term story, but suggests the market might be getting a little winded short-term.
Got it. So something to watch, but not necessarily a reason to panic yet. What about the shorter view, like the weekly charts? What do they suggest for the next few weeks or months?
Well, moving to the weekly time frame, the picture still looks pretty constructive, actually, which kind of supports the idea that any weakness might just be temporary.
Okay.
The price right now is trading above the 50-period EMA, the exponential moving average. Think of that like a dynamic support line being above it. That suggests the bullish trend could kick back in soon.
So potential for it to resume its climb.
Yeah. If that buying momentum picks up again, we could definitely see the stock try to retest that big psychological $200 level.
Round numbers matter, right?
They often do. And if it pushes through $200, then that all-time high around $208 could be back in play pretty quickly, maybe in the coming weeks.
Okay, so $208 is the key level to watch on the upside. What happens if it breaks that?
Right. If GOG can manage to break and stay above $208, then The next logical target would probably be the upper line of that ascending channel we talked about.
The ceiling of the corridor.
Exactly. And that's currently sitting somewhere near the $220 mark. So, potentially decent upside from here if the momentum holds.
And the flip side, what if that divergence plays out, where sentiment shifts? What's the risk?
Always got to look at the downside too. If the stock were to break below that lower channel trend line and also break below that key $143, $160 demand zone we mentioned.
The buyer stronghold.
If both those give way, then we could be looking at a more serious correction. In that scenario, a drop towards the $110 level isn't unthinkable.
Wow, okay. That's quite a range.
It is. And it's important for people watching the stock to understand these levels. They aren't predictions, right? But they're like signposts. They show where traders might act, where sentiment could shift. It's about mapping the likely reactions.
That paints a really clear technical picture. The trends, the key levels, the potential paths, like mapping the stock's weather forecast.
Something like that, yeah.
But as we know, the stock price is just one part of it, often the most fickle part. The other piece, maybe the more important piece, is the company itself, the engine underneath. So let's shift gears. Let's look under the hood at Alphabet's fundamentals. So what does this all mean? Does the financial reality match that generally bullish market view?
If we connect this to the bigger picture, fundamentally, Alphabet, or GOGL, it's a powerhouse. Let's just start there.
Okay.
As of, say, July 1st, 2025, if you run a discounted cash flow analysis that's basically trying to figure out what a company's really worth based on the cash it's expected to make in the future.
Right, the intrinsic value.
Exactly. Our estimate puts Alphabet's intrinsic value around $194.52 per share.
$194.52. And it's trading around 176 centers now.
Correct. So that suggests, maybe around 10% upside from here. It hints that the market might actually be undervaluing it slightly. And something to keep in mind is those DCF values can vary depending on your assumptions about growth, about discount rates. You might see base case values anywhere from, say, $167 up to $246. That range itself kind of shows the potential here.
Okay, so strong intrinsic value suggesting it might be a bit cheap. How does it look on those standard valuation metrics? The PE ratio, things like that, compared to its tech peers?
Yeah, this is where it gets really interesting for value hunters. Alphabet's PE ratio, price to earnings, is hovering around 17 times earnings.
17x. How does that stack up?
Well, you look at other big tech names, they're often trading somewhere in the 20 to 25 times earnings range. And the broader tech sector, easily into the mid-30s sometimes. So yeah, 17x. It makes Alphabet look potentially quite reasonably priced, maybe even undervalued compared to its peers.
So you're paying less for each dollar of Alphabet's earnings compared to competitors?
Pretty much, yeah. Its price-to-book ratio, around 6x, also suggests investors see value beyond just the physical assets. And EV to EBITDA, another key metric, is around 15x again. Looks reasonable relative to its operational cash flow.
Okay, so looks undervalued relative to its own potential and its peers.
Yeah.
What about the financial foundation? Is the balance sheet strong? Or is it carrying a lot of debt to fuel this?
Oh, absolutely not. The balance sheet is... it's incredibly clean, almost pristine.
Really?
Yeah, its debt-to-equity ratio is tiny, like 0.04x.
Wow.
Yeah, anything under 1x is usually seen as healthy. 0.04x is practically negligible. It means they have immense financial flexibility. Think about investing $75 billion in AI. They can do that without blinking, basically. No debt worries hanging over them.
That's a huge advantage.
Huge. Plus, their current ratio is solid, meaning they have plenty of liquidity for day-to-day stuff. And for the real deep divers, the Altman Z-score, it predicts bankruptcy risk. Alphabet's is about 12.4.
And what's considered safe?
Anything above 3 is generally considered very safe. So 12.4, it's like a financial fortress. Extremely low risk.
Okay, that's seriously impressive financial stability. Right. How did this translate into recent results? What kind of performance are we seeing? And what about cash generation?
The recent performance has been really strong, reinforcing that picture. Q1 2025. Revenue hit $90.2 billion. That's up about 12% year over year.
Solid growth.
Very solid. But even more striking was net income. It surged 46% to $34.5 billion.
46%. Wow.
Yeah, that's accelerating profitability. And free cash flow, the cash left over after running the business, which is vital for investment, buybacks, everything. They've averaged around $58 billion a year over the last 6 years.
Just churning out cash.
Consistently. Massive amounts. That's what lets them fund those huge ambitions.
Okay. Fantastic numbers. But Let's talk about the elephant in the room, AI competition. You hear so much about ChatGPT and others.
Yeah.
How is that impacting sentiment? How's Alphabet tackling that challenge?
Yeah, you're right. That's definitely where the mixed sentiment comes in. The primary concern is that AI competition. Can new models disrupt Google search's dominance? It's a valid question.
A real threat to the core business.
Potentially, yes. But again, you circle back to that valuation, that forward PE around 17.7x. It suggests maybe the market has already priced in some of that risk, offering potential value despite the concerns.
Okay.
And on the plus side, you have those knockout Q1 results we just talked about. Plus, they announced a massive $70 billion share buyback program.
$70 billion, that sends a strong signal, right?
Absolutely. It signals management thinks the stock is cheap, and they're putting serious money behind that belief. And they haven't been shy about showcasing their own new AI tools, showing they're fighting back hard.
So actively competing, not just defending. And big investments too, I heard.
Huge. The CEO explicitly reaffirmed they're spending a massive $75 billion just in 2025 on AI infrastructure.
$75 billion.
Yeah. That's not tinkering. That's a full-scale commitment to lead in AI. And on another note, they've also been managing legal stuff. Recently settled a shareholder antitrust suit, committing $500 million over 10 years to compliance.
So addressing the regulatory side too.
Exactly. Facing the challenges head-on, both competitive and legal, through big investments and settlements.
Okay, so let's try and pull all these threads together then. We've got the chart picture, long-term bullish, some short-term caution maybe. We've got the fundamentals, rock-solid balance sheet, strong earnings, maybe undervalued, and then this dynamic AI competition and regulatory stuff. This raises an important question. What's the overall takeaway for someone listening, trying to get that clear, concise picture of GOG?
Yeah, synthesizing it all, I think the core message is Alphabet remains a fundamental beast. You've got strong, accelerating earnings, huge cash flows, almost no debt, just an incredibly strong financial base.
Right.
And compared to estimates of its intrinsic value, it still looks potentially undervalued.
Yeah.
You absolutely have to weigh that against the challenges. AI disruption is real. Regulatory scrutiny isn't going away.
The headwinds.
Exactly. But then you look at the recent strong Q1, those massive AI investments, the big buyback. Those are powerful confidence boosters. They show a company playing offense. So when you see it trading at, 17 times forward earnings, that's still a discount to many peers. It suggests, maybe modest upside, potential 10%, 15% perhaps if they execute well on AI and regulatory stuff stays manageable. It's this blend of stability and dynamic innovation that really crystallizes it. A financial powerhouse navigating some serious technological shifts with a stock price that reflects both the strength and maybe some of the uncertainty. We went from charts to cash flow. I'll give you that quick but deep understanding of Alphabet right now.
And that just about wraps up another deep dive. Thanks so much for joining us as we peeled back the layers on Alphabet stock. We've hit the market trends, dug into that strong financial core, but also acknowledged the competitive and regulatory waves it's riding.
It really is a fascinating one to watch, especially now, and maybe a final thought for you to chew on based on our chat.
Yep.
Given that huge $75 billion AI bet they're making this year and how fast that whole landscape is changing, how do you think those strategic bets will actually play out against their super stable fundamentals over the next few years? And what could, a surprise innovation or maybe a sudden regulatory shift due to that valuation we talked about? Lots to keep an eye on.
Great questions indeed. Definitely food for thought. We always encourage you, keep digging, keep asking those questions, and stay curious. Until the next deep dive, take care.